once again, a very good afternoon or early evening to everyone who's joined us. And we thank you for joining in. It is my pleasure to welcome Mehtab and Anirudh from the FarMart team. They've been very kind and given us time on a Friday evening. So thank you and welcome to a series of Jiraaf webinars. So for those of you who already know us, and for those of you who are joining us for the first time, Jiraaf is a fixed income platform. We provide opportunities for individual investors to participate in fixed income securities and offer them yields between 6 to 20%, 30-day to 3-year tenor. This is across a multitude of product. But before I go to that, there is the team that is putting it all behind us. Saurav and Vineet, who are the co-founders, each of them has more than a decade in financial services. Then Apur, Vasu, myself, JP, Ankit, Vikas, we all have significant experience in financial services. The real reason behind this team to come together was we thought that there are not adequate fixed income opportunities for people like you and me, for people who have some exposure in real estate, gold, and public markets, but not an adequate portfolio on the credit side or fixed income side of investments. And hence we thought there is a need for a platform which allows investors to participate and to create a very robust, well-diversified, and a healthy fixed income portfolio. We've been lucky and we have got support from Accel Partners, which is one of the marquee funds in India. And we've been also backed by some well-known entrepreneurs, Siddharth Shah, FarmEasy, Mr. Ramakant Sharma of LiveSpace, and a couple of others. These are the products which Jiraaf brings together for its customers and for the investors on the platform. They range from government securities such as T-bills and G-Secs to corporate debt, which is again for short-term, less than 12 months commercial paper, to bonds, which are then longer in duration. We restrict ourselves to anything less than 3 years, but they can be much longer as well. Supply chain financing, leasing, and venture debt. So essentially covering from the very safe aspects of government securities at about 6.5–7% to the risky world of venture debt at about 15–20%. The idea is that people can create their portfolio according to their needs of tenor, yield, their own risk appetite, and more importantly, diversify their own investment away from public markets as well as real estate and the more traditional assets that have been available in the market. We've now been operational for a little less than 2 years. And in our own journey, we began in September 21. Till now, we have got about more than 100,000 registered investors with us. We have processed about 1,900 crores of investments. The most important figure on that slide is the 1,200 crore of repayments that have been able to give back on time without delay or default to people who have participated on the platform. And we are happy that now we have grown to a team of 80 people who are actually able to pull all of this together and continue to engage with audience and with customers like yourself who can then avail these opportunities through the Jiraaf platform. In case you have a question on Jiraaf, and as we dive deeper into FarMart, please use the Q&A box and type your question there. We will take them out after an initial discussion. And in case there are any follow-ups, please do type them out on the Q&A box. Mehtab and Anirudh, once again, welcome. May I request you to maybe kindly introduce yourself?
Yeah, sure. Thanks a lot, Prateek, for having us. It's great to be here and kind of present FarMart, of course, to you and of course your the investors as well, maybe or maybe not, that who are there on this call. So I'm one of the co-founder at FarMart, and I look after operations here in this organization, both procurement and sales as of date. My small background, I actually am a finance guy. I was at Goldman for 2 years, and then I worked for a think tank called NIPFP in Delhi as a policy consultant for 2 years, and started FarMart in 2016. Yeah.
Perfect.
Yeah. Hi, Prateek. And thanks so much for having us here. So just to introduce, I'm Anirudh. I head the finance department at FarMart and look after the treasury function also here. So I have been associated with FarMart for 2 years now. And my brief background. So I actually come from I am Lucknow background. I'm an MBA in finance. After which I worked with JSW Steel for about 8 years. I was a manager of finance there, heading their looking after their corporate finance department. Post which I have worked with Avanti Learning Centers, which was an edtech firm in Bombay, where I headed the finance department for 2 years. And for the last 2 years, I've been working with farm.
Thank you for that. Mehtab, maybe the first question for you: how was FarMart born? What's been the journey, and how did you reach the current scale?
Sure. So it's actually a long one. It's been more than 7 years since we started FarMart. So me and Alec, like we are two co-founders at FarMart. We know each other since 2000. So it's almost 23 years. We were school friends. In fact, we met for the first time during our interview for that school while having lunch. And, at that time, Alek was kind of working at Microsave. It's like a financial service consulting firm. And that time I was at Delhi as well. And we kind of regrouped in Delhi, and we were around 25, 26. So research was really at our core. And we actually have some background in agriculture, like through our parents or through our grandparents. And we kind of identified one problem, which was farm machinery. Farmers did not really have access to mechanized machinery to kind of pre-harvest or post-harvest services. And because we were very data oriented, we kind of looked at a lot of data and kind of we saw that a lot of small farmers don't have access to these machinery, and you really can't afford. If you have just an acre or 2 acre, it does not really make sense for you to kind of own your own tractor. So why not kind of give them on rent? So that was our first model that we started, and it was like a Uber for tractor model in essence. We did it for around 18 months, and that's when we kind of came through some issues more to do with the business model. So the problem here was that the operation was very hyper local, and you had to be unit level positive at one locality. And because after the 15% of farmers that we were servicing in one particular taluka or tehsil, they started asking credit. And it's not that we did not really anticipate it, but the problem here was that the cost of collection was kind of greater than our take rates or gross margins. So when you can't make money at a unit level, there's just no point of kind of scaling it. So, but then it kind of led us to the second version of FarMart. It was again, and this is within the same entity, Prateek. So it's we never kind of shut shop. It's just that we pivoted from one to the other. So there was another model that we did, which was to do with agri fintech. We used to lend to farmers, but we never gave them cash. We kind of built a relationship with these agri retailers. They're like mom and pop stores in rural India. They sell fertilizer, seeds, agri chemicals to farmers. So the farmers could kind of utilize their credit. It could be 10,000, 20,000 rupees, depending on their credit score. If he's an NTC customer, then 8,000 se shuru karte the hum. And he could kind of go to the shop, pick up whatever seed or whatever fertilizer he wants, and pay us after 6 months through installments. We did that again, but then we started coming across as a very operational intensive business. Collections abhi bhi cash mein the, and we started seeing ourselves to be more like a MFI 2.0. So, I mean, when Alek and I kind of started FarMart, we always wanted to do something big. So, aisa nahi tha ki it was a bad business, but maza nahi tha. So, we would have maybe been another Sonata or another, Dwara Finance in India, restricting ourselves to one region. So, that's where we kind of pivoted again, and we said, let's kind of rethink, brainstorm again. That's what kind of led us to what we do today. So today we're actually a B2B agri commodities marketplace. One simple and learning that we had was, if you want to build something scalable, this is our belief, some people could deny our approach, is that if you really want to help farmers, it is best to actually buy from them rather than trying to sell something to them. It's a very simple learning, but I would say this is what we kind of learned in these 7 years. So yeah, just maybe I'll stop there. And kind of, so this is the 7 years.
No, it shows a lot of persistence to stay on the ground and to continue to work for them and to continue to find solutions. So when did you arrive at the current one that it is better to buy from them than to sell from them? And then how did it shape the current idea?
So this is 2020. It's when we were kind of, there was this entire khata book, okay credit, pagar book wala, I would say, revolution that came in 2020. And we said, why can't we build something digital for this retailer? And we had a lot of metadata, like the transactions that were taking place with the farmer, between the farmer and the agri retailer, right? In the FarMart 2.0 model. One insight we got out of that was that the relationship between a farmer and a retailer is not very sticky. So we thought that, okay, this is a good problem to solve. Can we build something for this retailer that allows him to kind of bring stickiness for him from the farmer? So that's where we kind of built this retailer app specifically for these retailers. And there are approximately 2 million retailers. So if you look at Khata Book, uska market bahut bada hai. They're all the MSMEs in India. Our market will only these agri retailers. So there are approximately 2 million retailers in country. ये जो खाद बीज दुकान होते हैं, that service approximately 150 million farmers, right? Wow. So they're like, I would say, like again using an analogy, they're like the Suez Canal, right? To kind of get access to the entire rural markets in India. So we kind of built this retailer app for them. It was a free app. We started getting a lot of good users, traction. We started getting around 5,000 retailers on our app store. Issue was that paisa kaisa banega, right? Because nobody really pays for SaaS much in India. Uske upar, when your market size is so small, kitna bana loge? So that's when the farm laws kind of took place. It was tabled in the parliament of kind of democratizing the entire agriculture space. And that's when it kind of hit us that why not make this retailer a procurement partner, right? So general value chain is that a farmer kind of buys seeds and fertilizers from an agri retailer and sells his produce to an artiya in the mandi. So it was just that how can you not use that same person to do both activities, right? And that's when it kind of hit us ki, maybe this is where we make our revenue. So that's when we started utilizing these retailer points as our procurement partners. Of course, the farm laws kind of got repealed later. We found our way to kind of around that by kind of getting all the licenses in the market. But I would say that was like one particular point. This is around mid-June 2020 when we kind of kicked off.
And if you had to summarize, what is the value proposition of FarMart today, and who are your key stakeholders? How would you do that?
Simple, 3, right? For any person, you need deal flow, right? So deal flow aapko kisan se milega. Everybody fights for that bag of wheat, bag of rice. You're making your money on that commodity. So in essence, if you think of it, our competition is the current value chain, which is the mandis in the market, artiyas. And we kind of solved it at a very macro level, right? Macro level, bada simple hai. There are 7,600 mandis in our country. If you look at the geographical area of our country and you try to plot all of these 7,600 in our country, the radius for a farmer to access any of these mandis is around 45 to 50 kilometers. That's the distance a farmer has to travel to kind of access that. Now, if you further break this down from state to state, you go to a Punjab or a Haryana, small states, but densely populated with a lot of mandis. So the R drops to around 5-6 kilometers. Wow. So our value prop here, Prateek, is that we're trying to take markets closer to the farmer. So if you look at a state like Uttar Pradesh, the R there is around 60-65 kilometers. So that's the distance a farmer has to travel to get access to a mandi. So either a farmer would want to travel that distance, or what he would do is, that's where these intermediaries kind of start coming in the value chain. एक local trader होगा, कच्चा आड़तिया होगा, पक्का आड़तिया होगा, right? So that's, and everybody likes to make that 0.5%, 1% by the time it kind of reaches the end buyer. So again, at a macro level, one of our stakeholder again here is the farmer. Why he chooses us is simply because we kind of reduce his logistics cost. The second stakeholder, of course, on the demand side are the buyers. So we have a lot of processors and millers who kind of purchase raw materials from us. And these are kind of primary processors. They make, maida, flour, wheat, dal, mustard oil, soybean oil. And so these are like the kind of two biggest stakeholders, like the main stakeholders that are there on a platform.
So would it be fair to say that FarMart bridges the gap between farmers and primary processors across various agri commodities?
Yeah, absolutely.
And now maybe it's, if you can tell the audience a little bit about your current scale of operations, what are the commodities that you're dealing in, which are the places that you're operational in?
Correct. So our value, so because we're a very democratized platform. Again, if you look at this market fundamentally, there is a lot of fragmentation on the supply side. Demand side is kind of semi-consolidated. So when you're building a marketplace, you have to be very aware of that from start. If you kind of look at maybe like a Zetwork, right? The supply is kind of semi-consolidated if you're looking at industrial goods, because you're kind of sourcing your commodities from a plant and they're not that fragmented if you think of it. Either bilkul fragmentation hai. So at our like scale, that's where we kind of started from both sides.
Understood. And how many commodities do you cover today, and which are the states that you're able to
Again, sorry, I missed that part. We do around 19 commodities today, and completely all are non-perishable. We don't do F&V at all. And I kind of missed that. I wanted to add one point there is, because we're very democratized and we use these retailers. These retailers are kind of people who have existing infrastructure. So think of it this way: if I am a retailer in a market, मेरी एक दुकान है, I have one shop. Right next to my shop, I also have a small mini godown that kind of stores around 25 to 50 metric ton of goods. Why did he have that godown? Is because he used to store seeds and fertilizer bags. Right. So it's just that we're kind of utilizing the existing infrastructure to kind of source these 19 commodities, and we don't do F&V because F&V में आपको cold storage की जरूरत पड़ जाती है. Right, you need to, it's a very perishable commodity. We tried our hands at it, but it's not that it's not profitable, but our value chain, the way we've kind of set it up, does not accommodate these kind of commodities. So 19 commodities in total: grains, oilseed, pulses, various, masoor dal, urad dal, moong dal, maize, bajra, and so on and so forth.
Understood. Maybe for the benefit of the audience, if you could name a few companies that were doing this traditionally, a few of your larger or new age peers, that will also help them connect and give them a little more perspective.
In terms of, I would say, you would say competition, something like that?
Yes, competition, or more traditional players who are doing this, who are not competition, but at least the incumbents.
See, traditionally, Prateek, yeah, RTI karte the, right? The traders would kind of do it. And in terms of the new age companies, you could think of a lot of the warehousing companies like a Star Agri, National Bulk House Corporation, Arya, right? So they're like warehousing companies, but one of the services being a warehousing company is to kind of store the commodities and provide market linkage. And then you have an Ergos that is kind of building these small warehouses in rural areas for farmers to kind of store the commodities during the glut season and kind of sell it at a off season when the prices are higher. And then of course you have Dehat in this market as well, that plays both. They play the input and the output side. So the top line is kind of split between 50-50. And of course, Zetwork of business, they're also into this business, but they're more into it more from a financing point of view rather than from a sourcing point of view. So that's where we kind of also draw the line when somebody kind of tries to compare us to them. So we like to make our money on sourcing, Prateek. And that's where, of course, where Jiraaf also comes into it. We say that we're not experts in financing. हमको अपना margin बनाना है sourcing से. So, I mean, that's, I would say the competitive landscape where we kind of operate in.
No, that's helpful. And maybe now if I can also introduce Anirudh into the conversation, maybe this is a good time, Anirudh, and I'm sure Mehtab can also shed some light on it. Just in terms of numbers, where is FarMart today? And how do you see the last fiscal that has gone by and the coming quarters in this fiscal?
Yeah. So as I think Mehtab rightly pointed out, we are working across around 19 commodities. We are currently doing procurement across 7 states. Like that's what we did last year. And current year, we are adding about 3 more states in procurement. In terms of sales, we are doing it almost pan-India, right? And last year, although the audited financials are not final yet, but I think I can tell that we have done around 1,000 crores in terms of the top line. And currently we are doing a run rate of about 125 crores a month. And we expect that in the current year we will at least double in size from where we were last year. Right. So that's kind of broadly where we are in terms of now.
And just in terms of value chain, and I'll leave it to you, Mehtab and Anirudh, perhaps both of you can add to this. How do you see the value chain? Where do you see the margin in this business? And what is then FarMart's strategy of growing this and becoming even bigger than what you are today?
Yeah, Mehtab?
Yeah, sure. I'll take this one also. You can add on, Anirudh. So this business, right, is it fetches a margin. It's not a very high margin business, but it's a very high ROCE business. Okay, so you would at max you can make, on an average, say maybe a 2.5 to 3% operating margin. But here the payment cycles are very fast. They're generally in the range of 7 to 15 days. So your monthly ROCE kind of turns out to be around anywhere between 4 to 6%. So that's how this value chain kind of operates in, and it's very commodity specific also. So the moment you kind of go on to oil seeds, it's a high value commodity. The margin kind of goes a little low, but again your ROCE kind of really picks up. So if you were kind of asking more on numbers, then these are the numbers, Prateek. I would say that it's anywhere between 2.5 to 3% at max, where you can kind of fetch, and it's all sourcing. So it's not about, you're not really making money on financial margin. Of course, credit period badhaoge to apna margin badhega, right? So.
And then on the cost side, how does it translate to logistics and then reaching out to all the farmers, doing sales? How does that play out? Just broadly in terms of the parts of the value chain that get absorbed.
Sorry, Prateek, I'm sorry, just coming back to the previous question, just
Sure.
wanted to add a few things to what Mehtab had said. So one is obviously like we have the traditional B2B business where Mehtab kind of said that the margins kind of cap out at 2.5, 3%, right? But what we are also doing now is we have 2 kind of additional business streams, right? One is we are also doing processed commodities, where traditionally we were doing, let's say, procuring wheat and sending it to millers. Now we also have a marketplace where we take the miller's output of, let's say, a maida and sell it to for the secondary producers like a bakery, right? So that's where we also have we are building a B2B brand of processed commodities, right? So that's kind of one leg of the value chain where we see margins kind of really improving. And the second business is also obviously exports of these processed commodities. So these 2 business streams is where we see our margins kind of picking up in the coming quarters. Sorry, yeah.
No, thank you for that. Before we then go into the cost side of things, how do you see the private label play out? And have you started the exports? How is it playing out? Which are the commodities that you see in which markets the exports can form a good part of the business?
So on the private label, yes, we started it in the last quarter, and we are doing around, I think, 4-5 CR a month of this private label Mehtab. So we are currently doing it in refined wheat flour primarily, and we will do more like pulses also in the upcoming quarters. Right. And a bunch of other commodities, rice, pulses, etc. And we are seeing good margins around 4-5% in that.
So these margins, Prateek, are all operating margins. They're not like gross that we're kind of talking about, right?
Yeah.
So,
Maybe a quick reminder to the audience that in case you have any questions with regards to Jiraaf or with regards to FarMart, please put them in the Q&A box. The intent of this presentation is so that you know some of our borrowers who come on the platform regularly, and you can get an insight into what their business is, a deeper insight into how they think, and a deeper insight into how things look for them and how they envisage business. With that, let's get back to the conversation. So when you say it is operating margin, it covers all variable cost, or below that there are some other variable costs? If you can just give an idea of the cost side as well.
it's covered all the costs basically. So all our, logistics, all quality claims, because it's again, it's quality claims aa jate hain, any weight short. So all of that is covered. Only left is basically our, field cost and corporate cost. So those are kind of left. So today we're sitting at, Anirudh can kind of maybe specifically point out the number. We're almost net neutral EBITDA, I would say.
Yeah.
But you can confirm that, Anirudh.
Yeah, so we are almost net neutral. We are, I think, right now doing minus 0.6 in terms of EBITDA. But we hope that with scale, I think in the next few months will be EBITDA positive.
Just for our audience, and with minus 0.6, is it crore monthly?
Percentage.
Yeah.
Percentage.
So, I mean, that's also a good lead in into the startup environment has clearly turned, and some of our investors and people on the webinar, I'm sure, are concerned about how the funding scenario is. How do you see cash burn? And what are the precautions that FarMart is taking to keep its business healthy and not to be anywhere under pressure in terms of cash?
So we're very conscious of our cost structures from day one, Prateek. We knew, at a unit level, what we could spend. Like even if because, we kind of did, I would say, a semi-MFI model back in the day. So if you look at any MFI, they kind of get evaluated based on, the loan officer ratio to customers, right? Ek branch kitne customers sambhalta hai, right? What is the disbursement per loan officer? So even in our case, what happens here is every procurement associate, every quality inspector, every sales associate is kind of put into these pod systems. They're like small units. And then they're kind of given targets. We can only create a new pod once we've kind of achieved a particular target. So that really allows us to kind of ensure that our burn rates are very minimal. Of course, there are some room of improvement, and there are certain expenditure that we kind of do from a tech point of view, and they're more like investments that will kind of play out in the long term. Like some of the projects that we kind of do is more on quality, more on logistic pricing again. So these are some people, like some investments that we made that is sitting as an expense, but it'll play out in the long term.
Understood. And maybe just in terms of how much runway do you see? When do you see FarMart becoming profitable? How do you see that journey?
Yeah, so we have sufficient cash. Yeah, we have sufficient cash in bank. I think at our current burn rate, we have about at least 5 years of cash in bank, right? Just in terms of the runway. And from what our projections show that in the next financial year, not this financial year, but in the next financial year, we should be profitable in terms of PAT.
No, absolutely. It's been wonderful to partner with FarMart and to see the journey, at least in the short while that we've been there. And our compliments to the wonderful work that's been done, to the technology that's there, and more importantly, to the work on the ground that's continuously happening in growing the network of farmers that you have under your umbrella. and the number of commodities that you can touch. Mehtab, Anirudh, very grateful and thankful to you for your time this evening. I would also like to thank all the audience for joining in. And with that, would like to bring the webinar to a close. In case there are any questions that we've not been able to take up, please do write to us at support@jiraaf.com and we will respond to that. And with that, once again, thank you everyone for attending. Mehtab, Anirudh, see you soon. And thank you very much.
Thanks.
Thank you. Thank you so much, Prateek. Thank you. Thanks everyone. Bye.